Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Monday, November 16th, 2020. I'm going to call it Moderna Monday, coming on the back of last week's announcement from Pfizer that there was a vaccine that had extraordinary results in early testing. The Moderna vaccine did even better. Now, the difference between the reactions is last week the Pfizer news came out more or less in a surprise. We were more worried about the election and its aftermath than most other things. And so the Pfizer news was a welcome bit of relief, and off we went. There was a rotational aspect to it. The best performer was certainly the Russell 2000. We saw outperformance in beaten down sectors like banks and energies, which had more or less been left behind throughout this rally. So it was understandable. We did see some underperformance, but ultimately not really true negative performance from the what I'm going to call the stay-at-home trade. They didn't do that badly, and that's kind of what we're seeing today. The response is a bit more muted. Yes, we got very good news. Yes, this vaccine is easier in some ways to deal with than the Pfizer vaccine because it requires normal refrigeration as opposed to extraordinary refrigeration. There's still, but we're still talking 6 months away, 5-6 months away, till the majority of the population, at least in the U.S., can be inoculated. And while markets should be discounting events that are, call it 6 to 12 months down the road, there's a lot of potholes that we have to go through in between. But for starters, I think the reason that we're not seeing the type of reaction this week that we saw last week is because of the reaction that we saw last week. We already started to price in a vaccine. So this is, I said before, the vaccine itself shouldn't have been a game-changing piece of news, but it was. I think largely because it was coming on the back of some uncertainty, largely because it kind of just gave cover for people to rethink their investment strategies. Whereas today it's more incremental. We're following through on trends that we already saw in place. We had S&P 500 close at a record high on Friday. So ultimately today, while we are building on that, with S&P up another percent, with Russell up over 2%, with even NASDAQ up about 0.5%, it's generally another positive day. One other thing to bear in mind is it's expiration week. I've never fully been able to quantify this, so it's tough for me to talk about in a meaningful way. But one of my rules of thumb is you buy the Monday before expiration. You just generally do. And I think that was why we saw the futures up before the Moderna news came out, not because of anything meaningful, but they were already up 20%. And that was, I think, largely because you saw that mentality. We closed at highs. We built on those highs. The news was incremental. There was a little bit of a drift lower, a little bit of profit taking first thing in the morning today, but now we're sort of back into the trends that we saw in place with things broadly higher. Now this morning, I was listening to Bloomberg Radio this morning, and there was a parade of analysts coming on, and I'm one of those people from time to time. And the most interesting commentary that came out was from the host who said, "Does anyone come on our program who's not wildly bullish?" And that to me is in many ways the most telling risk to the market. And that is that there's this weight of money out there that is sort of making itself right, whether or not it needs to be or not, whether or not it's for the right reasons or not. And the bottom line is it's not as though there's anybody out there really telling a contrary story. And that tends to be a situation that can be a little worrisome. If everybody is on the same side of the boat, it tends to tip. And I think that's kind of the biggest risk factor that's out there. I know that sounds insane, that the biggest risk factor that's out there, despite the fact that we have electoral, still an election that is being contested by the president, and still the fact that we are seeing worsening COVID with increasing lockdowns, and some of them not lockdowns per se, that's the wrong word, but rolling back and mask mandates and things of that nature. Some of them in states that really had not been thinking of implementing these things before. These are the type of things that that the market is overlooking. It's not necessarily wrong because markets are supposed to be looking out 6 to 12 months. And what I'm talking about in terms of vaccine is in that time frame. But boy, we've got a rocky few months. And by the way, whatever happened to stimulus? So, this is one of these things that the market, I think, is changing its narrative. It's got the bullish thesis, and the narrative changes to fit whatever bullish thesis it needs. That is one of those things that works until it stops working. I don't know what the catalyst is going into, Thanksgiving next expiration this week, Thanksgiving next week. Is there enough to change that? Yeah, perhaps if COVID really starts to get worse and really starts to have a detrimental effect on the economy. But right now, I think people are just so enamored with stocks. The biggest risk is that the trades all get too crowded. In the meantime, though, the trend is your friend. When I start to look at volatility indicators, VIX is off its highs. Certainly, we saw 40 about 2 weeks ago, but it's still at about a 23, and we're still seeing the curve in that 24 to 26 range. So the markets are still telling you that somebody somewhere is hedging. Perhaps that's the counter argument to what I was just saying, which is, if everybody's that bullish, well, then why would people be looking to hedge using VIX going forward? We can talk ourselves into circles. As of now, that's where we stand today. And stay tuned. There's going to be a lot of stuff to come in the days and weeks ahead. Bye-bye, everybody.